Hello, and welcome to CMG Forex Online Lessons. My name is Emmanuel. You can also call me Kujo. This video series is on the topic mastering your candlestick patterns. If this is the first time you are watching this video, I suggest you go back to the beginning of the series, episode 1, and then to catch up with us. This is episode 9, and the subtopic is on the tweezers tops and downs, right? Tweezer tops and bottoms. So without wasting much time, let's zoom in, right? So when you look at the tweezers, we have two types. We have the tops and then downs, right? So usually, if you have observed, most of the patterns have the counterparts, right? What it means is that when you have the one side, we have the opposite of it. So far, this is what we have seen so far from the beginning of the patterns. A lot of them have the opposite, right? So we are on the tweezers tops and bottoms. There are two types. Now, the tweezers top formation is considered as a bearish reversal pattern seen at the top of an uptrend. And the tweezers bottom formation is interpreted as what? A bullish reversal pattern seen at the bottom of a downtrend. So the name just makes it easy to understand, right? Very lucid, right? So if your tweezers top, when you have found at the top, the trend is going to be what? Going to come downwards, right? So a tweezers top, found at the top, the trend is going to reverse down. So meaning that the tweezers top are reversal patterns, right? They are the bearish reversal patterns. The bearish means that their prices are going to go down, right? And they are found at the top. Hence the name tweezers top, right? So that is it. And then the tweezers bottom, they are usually found at the bottom, right? And then when they are found at the bottom, what they do is they move prices up, right? So when they move prices up, hence their name, bullish reversal pattern. That is it. So we have the pictures to look at them. Now, there's one thing I want to draw your attention to, that these patterns are things that are the basic things, right? They're the basic things. You can't do away with them. So I suggest that any of them that we treat, I suggest you go to Google, right? You search it for the pictures, right? And then you print them out. If you can't print them out, now we are in the digital world. So I even suggest that you have a screenshot of them on your phone. As a good trader, and if you are really serious, right, about this profession, in fact, this is a profession, not just anything that you can do whatever you like. Even though it's a profession, in the same way we have part-time jobs and we have full-time jobs, this is actually the same, could be treated as the same thing. I'm a full-time trader. That's what I do so far, for now. So I think you should take it serious, right? Even if you are a student, you are a worker, you are not working and all that, you can actually use this, right, to keep yourself occupied. It's actually a profitable a discipline that you can actually get yourself involved, right? So if you are really serious, you take screenshot of these things. Your phone are basically the things, gadgets that you move around almost with. Everywhere you find yourself, you use them, right? So from time to time, you can be looking at them. Having a graphical representation is going to actually help you learn these things. So have a screenshot of them on your phone. Sometimes you can have them as a wallpaper on your PCs, on your phone actually, on other screens. You can print them out and print them in your room until you think you have actually learned that. That is what I do. It's going to help you in a long way, right? So we have the tweezers bottom. The tweezers bottom, like we said, is a bullish candlestick pattern. Tweezers bottom, right? So tweezers bottom is bullish, right? we learned so far. We learned even just now, the Tweezers bottom is a bullish one. Hence hence the name bottom, Tweezers bottom, right? And then when they are found at the bottom, the price is going to go up. So that is it. And this is the representation, right? Usually we have the red color and then the green color coming, or the black color and then the white color coming, right? So this is how it looks like. It's as simple as this. So when you go to the Tweezers top, it's the opposite of this. So the bearish candle comes, then you have the bullish one coming. Now, look at it very critically. They are of almost the same height. That's one of the factors that you should look out for, right? Usually of the same height, right? Either small or big as it is here. So they are almost of the same height, lying side by side. If it is a bullish one, the bullish comes second, and then the bearish coming first, even though the color does not really matter. But for here, the color matters. Just look at them very well, right? So let's box them. So the Tweezers top also comes in. The Tweezers top is just the opposite of that. Like I said, the heights are almost the same, right? Usually they are of the same height, right? Now, if it is Tweezers top, which is what a Tweezers top, or is a bearish version of that, right? Of the bullish one, right? So if it is bearish, this one comes what? The second, right? Hence the name Tweezers what? Top. They are bearish of that sort, right? The color does not matter, really does not matter. It's about where they form, right, on the chart, right? I am not going to stop saying this. The color does not really matter, but at times you need the color for understanding purposes, right? So that is it. Now, the Tweezers top formation consists of two candlestick patterns. It consists of two candlesticks, like we said. We said some of the candlestick patterns are of one type, one, single one. We have some that are of two, like the morning star and evening star, we have two, right? The dojis are of one type and all that. The harami is of two, right? Now we are on the what? The tweezers, right? The tweezers are of two types, two kinds, right? So now the first one is bullish candlestick, followed by a bearish candlestick. So we are talking about what? The Tweezers top, which is the bearish one, whatever. So the Tweezers top, the first one is bullish, followed by a bearish candlestick. It's as simple as that. And the Tweezers bottom formation consists of two candlesticks as well. The first candle is bearish, followed by a bullish one. So hence the bullish or the bottom, the Tweezers bottom. So that is their bullish kind. Now, so we can say that the Tweezers bottom is the bullish version, right? It's the bullish version of the Tweezers top. It's just the opposite of that. Tweezers bottom is bullish, right? It's bullish. Tweezers bottom is the bullish one. And then the opposite is for the Tweezers top. Now, the Tweezers top occur during an uptrend, right? They occur during an uptrend. They are top. So they occur during an uptrend. When the buyers push the price higher, right? This gave us the impression that the market is still going up, but sellers surprise buyers by pushing the market lower and close down the opening of the what? The bullish candle, right? So it means that there will be a general uptrend, right? A general uptrend, price going up. That's bullish. The bulls are in what? In place. They are working, pushing the market upwards. Then all of a sudden, at the end of an uptrend or at the top of an uptrend, the sellers come in and then they move the market down because a Tweezers top has been formed. So that is the idea. Now, wait, okay. Now, this price action pattern indicates a bullish trend reversal when we can trade it if you can combine this signal with other technical tools. So what it means is that you can't only trade them. You can't trade only the Tweezers top and Tweezers bottom, right? So when you see them, you have to check the factors of confluence that we talked about, right? You have to look at other factors, which we are going to do that, right? You see them, then the second factor that you have to consider is to draw your resistance and support levels and all that, right? Then with time, with in-depth knowledge, you can put onto your charts what we call the indicators, right? Technical indicators. So this is what we call confluence. You'll be adding to the factors that you have, the information that you'll be adding more to it until what? You think you are okay. You are convinced that you can actually enter the market, buying or selling that market. So that is what it actually means. Now, okay, let me take from here. The Tweezers bottom happens during the downtrend, right? They happen during the downtrend, bottom. So it's bullish. So when they happen at the bottom, they won't move the market up. Now, sellers push the market lower. They feel that everything is going all right. But the next session price closes above or roughly at the same price of the first bearish candle, which indicates that buyers are coming to reverse the market direction. So it's as simple as that. So if Tweezers bottom happens at the end of a downtrend, which initially signified as if the sellers had control of the market, then all of a sudden the buyers come in with a much force, right? Pumping in money, huge sums of money, dollars, and then they reverse the market. It's as simple as that. This pattern is very simple. Now, if this price action happens near a support level, right, meaning a Tweezers bottom happen at the support level, it indicates that a bearish reversal is likely to happen, right? With bearish candle, which indicates that buyers are coming to reverse the market direction. If this price action happens near a support level, it indicates that the bearish reversal, so it should actually be what? A bullish reversal is about to what? Happen. That's the mistake. That's a mistake, right? So like I said, if I see mistake, any grammatical or whatever, I have to come in with that. So that is it. So this is bullish if only we are still talking about what? The Tweezers was. So if you are talking about the Tweezers bottom, right? So Tweezers bottom, if you found them at the bottom of a downtrend, the market is going to what? Be what? Bullish reversal, meaning it's going to move upward. That is, I hope you are not confused. I just made a correction here. Instead of bearish, it's going to be a bullish. If the bullish, if a Tweezers bottom is found at the end of a downtrend, there's a likelihood that the trend is going to be what? A bullish reversal, meaning the market is going to go upwards, move upwards. So that is it. So like I said, if you are still talking about this, the book just made a mistake, right? And then when they are found at the bottom, with the help of your support line as a confluence, what happens? General down, but this is formed, Tweezers bottom, right? So when it happens, boom, the market moves up. So the chart above shows us a Tweezers bottom that occurs in the downtrend. The bears push the market downward on the first session. However, the second session opened. So this is the first session, let's say that way. And the second session opens, where prices closed on the first and went up, straight up, indicating a reversal buy signal. That is it. That you can trade if you have other elements that confirm your buying decision. Don't focus on the name of a candlestick. Try to understand the psychology. So we are going to draw your attention. We're going to constantly remind you of the fact that the color does not really matter. But just look at the psychology. The psychology is what? How the candle actually formed or the pattern actually formed. What happened when it opens? What happened until it closed? What was the pressure? What was the momentum? Right? So that is it. So now, because if you can understand why it is formed, you will understand what's happened in the market. And you can easily predict the future movements of the prices. So that is as simple as that. Now there are some few exercises that we need to do, right? So we are going to do it here. Now, I think that you get some information about Japanese candlestick. That means I think that we have gotten information about candlestick pattern. That's it. You know the anatomy of each candlestick and the psychology behind its formation. Let's take this exercise to test your knowledge and see if you still remember all of these candlesticks, what we talked about. Look at the chart below and try to find the name of each candlestick number, and then the psychology behind its formation, right? So this is what you're going to do. Now, don't worry, if you get them wrong, it doesn't mean you are a bad student, right? I myself, for me to get them right, all of them right, I had to read this book like 3 times to get the full understanding of that and even get them correct, all of them correct. Some are easy, some too, they might be confusing, right? So if you get them wrong, it's okay. You can go back, you can come back to it. You will keep doing the learning the patterns until what? You have them at your fingertips. It's very important. You are not going to use one day to get them right. Of course, it is normal, right? So that is why you have to do the practice, constant learning. Make them readily available on your screens, in your room, and all that, right? Like the way some people do learn instruments. This is what you're going to do. You learn them in the same way, right? Until you get them correct. So this is it. So we're going to have a good look at this, right? So number one, you look at it, where the arrow points to. You take that very box, right? That very box, and then identify what? That pattern, right? Look at that, identify that pattern. You look at that, identify that pattern, right? So this is what we are going to do. I think the first one is very easy. We move to the second one, which will be a bit confusing. So just relax, right? If I get it wrong, we are all doing it together, right? Even though I'm the one talking here, and I am what we are going to do it together. So the first one, number one, pointing to that box, the one in what? In red ink, right? This one. So this is what? Who can tell me? I know I'm the one going to say this. So what kind of pattern is this? Right? So you can write this thing down, right? After that, you check if you got all of them correct. If you are wrong, you do that again. So the red and the small dot. So what you see is that this is what? A bullish harami. Number one is what? A bullish harami. VH, right? Then we move to the second one. The second one is what? Tweezers what? Button. CD. Tweezers button. Right? So you can actually pause this video, right? And then you answer it. After answering them, then you play it to see the correct answers, right? Or before you even move to the answers. That is it. Then the third one, I think is what? Bullish engulfing, right? Bullish engulfing. Bullish engulfing. The same thing for the fourth one. Bullish engulfing. Bullish engulfing. The fifth one is also bullish engulfing. The fifth one is bullish engulfing. The third, in fact, the sixth one is also bullish engulfing. I hope I'm correct, right? I hope we are correct, right? So we see it at the end. The sixth one is also bullish engulfing. Now, The last one is what? A harami. But what type of harami? I would say it is what? Bearish. In fact, bearish harami. You can also say only a harami or whatever, but or inside whatever, inside pattern, whatever. So that is it. So we are going to look at the answers now. So now, if you can easily identify these candlestick patterns, you understand why they are formed. You are on the right path, right? But if you still struggle to identify these patterns, you have to start learning about them again. So you feel like you have mastered them actually. So don't be alarmed. Don't be discouraged if you get them wrong. It's a matter of learning. You won't get things on the first attempt, especially when it comes to trading, because in fact, this profession actually, you are going to lose and you also gain. So just get yourself abreast of that. Just understand that. Accept it. That is it. So now the first one is what? Bullish harami. Like I said, so let's go and see. It's what? B, bullish harami. You got it correct. Now we come to the second one. The second one is what? Bullish tweezers, right? So meaning tweezers bottom. That's it. Tweezers what? Bottom. It's as simple as that. Tweezers what? Bottom. That's true. So let's see. Yes, tweezers what? Bottom. Then from 3 to what? 3 to 6 is what? Bullish engulfing. 3 to 6 is bullish engulfing. That's 4 of them. So let's go and see. Look at that. Of course. So that is it. Bullish engulfing bar. Right? It's bullish. They just said it's a bullish engulfing. But I actually what? Qualified it with the adjective. What type it is? It is. Because we have different types of what? Engulfing bars. Right? Good. So 4 of them. 1, 2, 3, 4. That's correct. You got them right. If you were able to do this, then you are very good. You are good to go, right? It doesn't mean you won't have to come back to this and be learning it. You have to come back from time to time, watch these videos. It's very important. So with the help of the book, I do that at least every month. I do that because I actually teach people one-on-one online. So it's like a book that I use, right? So I read this often. Now, the 7th one is the bearish harami, right? I qualified it, bearish harami actually. So let's see what is stated. 7th one saying that it's what? Harami pattern. But I qualified it. It means that I actually understand this. I'm not just giving answers because I have them often, but because I actually understand it, right? So that is it. So I actually qualify it to tell you that this is not just any harami, but actually a bearish what? One. That is it. So we continue. There's no need reading about under them. So let's look at the second example, right? So let's take another example. Look at the chart below and try to figure these things out. Now, I'm going to give you some few seconds to get this thing right. We have 1 to what? 1 to 4. Right? So that is it. Bear in mind, on this particular one, we have 2 there, meaning we can have 2 different types of what? The engulfing there. Taking one candlestick, like the first one, and then taking the 2 as a whole. I don't know if you understand. I told you some candlestick patterns can have 1 candlestick, 1, and then others having 2, 3, right? So in this case, you treat one of this, like this one, you treat it once, and then treat the 2 as a whole. So don't worry, we have a look at that. So I think you are okay. So now here, my answer or our answer, if only you you side with me, this is what excuse me a minute. So if you side with me, this is bullish engulfing. This is bullish engulfing. Then when I take only one, this one, I can say this is a hammer. The hammer one. The hammer, the two is the hammer. Taking only the first candle in that could be the hammer, right? That is the hammer. Or the pin bar hammer, the type, that type. Then looking at the whole picture, I can say that this is what this is the harami. This is the harami, in the sense that this is the first one. It's what engulfs the whole of the second one, right? So I can say that this is what a bearish harami, or better, so just only harami. You are good to go. Harami, you are good to go. So the harami one, the fourth one is bullish engulfing. So let's see this time around if I am correct. If I'm not correct, look at the answers and then go away. So the first one is what? Bullish engulfing bar, like I said. The second one is a hammer. Number two is a hammer, right? Number two is hammer. Then the third one, what did he say? Is, let's see if it is harami. Okay, now the third one is saying that hammer, which is the large body plus the small body, baby. So what is it equal to? It's equal to what? The harami pattern. So I am correct in the end, right? That is it. So then go off in the hammer, then move to what? I just look at the patterns. If I know most of us are going to get this thing wrong, this one, the third one wrong, but no problem. Now that I've explained, I think you have the idea of what it is. If you don't know what is the harami type, I think you have to what? Go back and read or watch that video. Then I think you'll be good to go. Right? That's very simple. So, and then the third is the bullish one. The fourth one is actually the bullish one, bullish engulfing. So that is it. Now, please, I want you to open your charts and do this homework over and over again. You will see that with screen time and practice, when you say screen time, watching your screen for a long time and then doing your practice, right? You understand when it comes to trading, when you start trading, you realize that many a time if you enter a position, you are often glued to your screen, your PC, right? Hoping and making sure that the prices move in your direction, right? So that's what we call the screen time. You constantly what? Stuck to your screen, your phone, your PCs, whatever screen that you are using, you'll be stuck to that. So that's what we call a screen time. And so with practice and then watching all these things, you understand what the candlesticks tell you about the market. So you just have to do this. When you go to Google or whatever, or even with your trading view, right? Just enter a currency pair and then look at how prices move, right? So that is it. Now don't worry about how to enter and exit the market for the moment. Take your time and try to master the candlestick patterns discussed in the previous chapters. So that's what we're going to do. Don't worry yourself. If you're amateur or intermediate, just relax. We will get there, right? So just relax and do this. Now, in the next chapters, I will arm you with techniques that will help you and identify best entry and exit positions based on candlestick patterns in combination with technical analysis. Trust me, these price action strategies will turn you from a beginner trader who struggles to make money in the market into a profitable price action trader. It's as simple as that. So I think we'll call it a day on this episode, and then we'll meet in the next episode, right? Once again, like our video, subscribe to our channel, email us if you need private lessons. Thank you very much for joining us. See you in the next video. Thank you once again.